warm welcome. This week we're going to return to a subject that we discussed in the past as well, and perhaps we'll continue to discuss in the weeks ahead as well. GST, or the Goods and Service Tax. There's a reason why. Each time the discussion has been premised on the belief that it's a done deal, only for that belief to come a cropper. This time, however, there is reason to believe that this time is going to be different, because as far as getting the supporting legislation in place is concerned, it's a case of when rather than if. Of course, the government had to give in to two of the opposition's main demands, one relating to the additional tax of 1% and the other regarding full compensation to states for 5 years. But is that the beginning or the end of our GST troubles? That's the question I'm going to pose to my panel of experts. Satya Poddar, partner EY, Kavita Rao, professor NIPFP, the New Delhi-based think tank on all things fiscal, and Vivek Mishra, leader, Indirect Tax, PwC. Welcome to the show, all three of you. Let me start by asking you, is the hype overdone? GST is being billed as the biggest tax reform, and markets at least seem to be going overboard at the prospect of it becoming a reality. But would you agree that tax reforms, by their very nature, take time to have a real impact on the ground? So the benefits will be seen more slowly, more incrementally, much like the tariff reforms undertaken in the early years of reform, where it was only after a decade or so that the Indian industry really felt its full impact and became more competitive thanks to lower customs duties. Let me start with you, Kavita.
Yeah, I do believe that you would see some benefits, but the benefits are not going to be in the initial years. It takes a while for all the benefits to kick in. As you said, the transition costs are going to be substantially significant, and it's only when we've worked through the initial transition that we can expect to see benefits, because the benefits require people to invest more, and I think all of those decisions take some time to roll out.
Since what we're going to see is not a comprehensive GST, but one that omits a number of items, petroleum, alcohol, real estate transactions. So would you think that the benefits are a little overdone?
I think the benefits are overdone for some other reasons, not for the reasons you mentioned. Real estate is an important sector, and keeping it in or out can make a substantial difference. But as far as alcohol and petroleum products are concerned, most countries in the across the globe like to consider these as sin commodities, and hence would like to tax them at a higher rate. And so even if we were doing GST, we would perhaps be levying other taxes on over and above GST. So the benefits to these sectors or the cascading resulting therefrom would not really disappear even if you had a comprehensive GST for these sectors. So the real estate story is correct. What I would say is that some of the other benefits that that people have been talking about have perhaps already been realized in the economy, given that we are talking about studies which dealt with an economy pre-introduction of VAT. So yes, some of the benefits perhaps have already been incorporated in the economy, and some of them will not be realized, given that a more important sector, I think, is electricity, which is kept out, and which I think is more damaging than a lot of the other exemptions to GST.
Vivek, can I toss that same question to you? Particularly given, as I said, the items that are omitted, is it a little exaggerated, the benefits?
I don't think so. I think that the current tax system is not very popular or very transparent. It's very complex, and this is realistically the only road to change the current tax system. The hype, yes, the benefits will take many years to accrue, and I think there's a huge underestimation of the teething pains. The teething pains are not going to be for 3 months or 4 months, but it can't be helped. So in that sense, I mean, I think the hype is understandable.
Satya, would you agree, or can I shift to another related aspect, that is the deadline of April 1st, 2017? Given the fact that there are so many more things to be done before we really have it on the ground, is it a reasonable deadline, or will government again end up with egg on its face? Remember, the original deadline was April 2010, and it won't be the first time or the first government to find itself falling short on their deadline. After all, VAT, which is a much more simple tax, took about 10 years. So is the deadline of April 2017 realistic at all?
If you can allow me to address the first question first. I always happen to be on the wrong side of the debate. I truly believe that there are two aspects of the GST. One is a constitutional amendment, and this is not a simple, ordinary change. It's truly transformational. it defines, it charts a new course in the evolution of fiscal federalism in India.
But its impact will also be as dramatic, you feel?
And it will impact the economy in a massive manner, for better or for worse. But for the first time, we are getting rid of the legacy tax system we had from pre-independence era. We are replacing it by modern taxes which have the potential to be applied in a neutral and economically efficient manner. Secondly, it deviates from the historical federalism system based on conflicts and tussle between the center and the states to one of cooperative federalism. And this cannot be underestimated. And the benefits of this cooperative federalism model will only unfold over time. On the second question about
because
economic
if it's so complicated, then is April 2017 at all realistic?
Well, but what is complicated or not, only time will tell, because much of the detail on the GST design is awaited. Nothing has been announced and agreed to so far. Only thing that has been agreed to, which has made good progress, is the GSTN platform for administration of GST. But the tax rates, tax base, the place of supply rules, allocation of revenues between the states and the center, revenue guarantee formula to the states, all of those things are beyond, they're at a very rudimentary level. There's an in-concept agreement that these are issues to be addressed, but all the details are missing.
So, which brings me to our question. So, in that case, how can we even talk of 2017?
2017, you always have to have a deadline.
However unrealistic.
If you don't have a deadline, you never reach there. And once you set the deadlines, you get there sooner or later. So if it's not 17, sometime later, how does it matter? The most critical thing is that if it does not happen in April 2017, most likely it won't happen before the elections.
Okay, so you feel that if not 2017,
politically
it will be very different. Even after the states and the center have agreed to the major part.
Well, they have agreed, but there are lots of horror stories that come out in the transition part.
Okay, Kavita, Satya spoke of horror stories, but the government in fact has resolved only some of the sources of friction. In fact, the most contentious aspect, the revenue neutral rate, has been shelved for now. The GST Council is supposed to take a view, but given the wide differences between what has reportedly been suggested by NIPFP in the region of about 27% RNR and what has been proposed by the CEA, Arvind Subramaniam, of 18%, and reports that states want an even lower level, do you see that as a major stumbling block? Or now that the centre has agreed to compensate the states fully for any revenue loss for 5 years, will states be quite happy to go along even with a lower rate?
First correction that I should make is NIPFP didn't produce a 27% number, which keeps coming to haunt every discussion on RNR on GST. The number that we did produce was something in the range of 22 to 24%, depending on what the states want to be compensated for. There is a dispute between the center and states as to whether CST should be compensated at the present 2%, which is what they are getting, or at the historical 4%, which is what they were committed, which they had received a commitment from the union government as the point of compensation when GST is introduced. Now, the CES committee has done its numbers on the basis of 2% CST, and they have also kept out a significant chunk of goods which is supposed to be taxed at a higher rate. So, you can always play around with what can be taxed at a higher rate. So, do you want a 2-rate structure or a 3-rate structure and so on. So, the more you are willing to talk about the entire detail, the larger will be the variations in rates that come from the different models. So, but those issues apart, I believe the rate of tax is always a political decision, and it is important to consider it a political decision. No study by any institution is going to give the government the right number to start with. It's only an input, and what needs to be taken into account when you're trying to decide whether the input is implementable is to ask yourself whether it's politically acceptable to implement GST at one or the other rate, apart from the fact that whether it's going to generate revenues. I would be conservative. I would think of a 20 to 24% rate, but that's again a discussion that needs to be undertaken within the GST Council.
Okay, that's true. It is a political decision, but Vivek, the government clearly wants to push through GST, and hence the pressure to get the constitutional amendment through. But it's a very complex tax change. So are all the nuts and bolts in place? What is the kind of plumbing that we need, and is that in place?
Yeah, we can discuss that if you have a 30 or 40-hour program.
Okay, but very briefly.
Hugely complicated. No. As Satya said, nothing is in place. It's all in place in a very conceptual level. When we go into the details, and I just want to mention one point: place of supply rules. Place of supply rules extremely complicated, extremely contentious. So when we get into the details, on many things there are no easy answers. It's very, very complex, and we'll have to go through that journey.
Okay, Satya, Vivek is not even venturing into what needs to be done. But I'm going to ask you that given that, as we said, it's not a very comprehensive tax and there are many aspects which still have to be laid out, etc., should we go ahead with the GST, warts and all, and somehow go through it and hope that these will get worked out in the course of time? Or should we aim for a more perfect GST and then push the deadline a little further?
You cannot be any better than the constraints imposed by the Constitution. But within the constitutional constraints of tax not applying to these 4 sectors, I should go for the perfect model, or as close as possible to the perfect model, because the perfect model is a win-win. Win-win for the government, they'll get more money. Win for the industries and taxpayers because the tax compliance will be simplified. It's also win because adverse impact on selected industries will be minimized. The secret of the win-win model is very comprehensive base within the constitutional constraints and the lowest possible tax rate. I disagree with Kavita that we need a tax rate of 20 to 24% to break even, to have the revenue neutrality. The total tax revenues to be replaced by the GST, excluding petroleum and all those factors, are only 6% of GDP. And my rough rule of thumb is that you need a tax rate of twice the amount of tax to GDP ratio you want to collect. So 6% taxes to be replaced require a tax rate of no more than 12% if the base is comprehensive. If you get a tax rate higher than 12, it means that you are not prepared to go with a comprehensive base model.
Okay, so we have 2 tax experts not being able to agree. So imagine what will happen when you have 29 states and 1 center to try and get to a rate. But I'm afraid on that note, it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're discussing the nitty-gritty of the GST. The constitutional amendment is only a part of it, it's just the beginning. But there's much more to GST, and that's what we're discussing with our panel of experts. Kavita, the role of the GST Council, what is the role? Will the Council really have the authority to enforce its decisions? Because given our track record, when it comes to bodies like the Interstate Council, the NDC, etc., the empowered group of state finance ministers, they're fairly weak entities with only moral authority at best. And at the same time, you make it a quasi-judicial body, then you have the entire issue of the judiciary wanting a presence, and that's like opening up a Pandora's box. So what really can the GST Council do?
So when the discussion on the constitution amendment started, the idea was that GST Council can advise. It is an advisory role. They recommend a design, but there is nothing mandatory or essential for everybody to follow. From discussions that I hear of late, the implicit assumption seems to be that everybody will follow exactly what the GST Council says. The proposed amendment to the Constitution, which is being pushed through today, suggests that the GST Council will also have the right to discipline anybody that needs to be disciplined. Now, I personally don't believe that's a very effective way of going about it. Partly because you need consensus within the GST Council or a majority within the GST Council for decisions to be passed, and it is very difficult to get changes recommended or otherwise from where we stand. That having been said, I believe that a lot of states and center will not really have much incentive to move very far from the accepted design, given that GSTN will constitute the backbone for the entire system. Your ability and the incentive to actually set up a parallel system and try to pull yourself out is actually very difficult. So in terms of procedures and processes, you'll perhaps fall in line with what the GST Council recommends. The big question is, will you remain on the same page vis-a-vis the rates of tax? And here I believe, and I will be perhaps in a minority here, I believe that there is no reason for us to have a uniform rate of tax across the entire country. You can have a floor which nobody should be violating, but if a state chooses to go above the floor, there is no reason for anybody else to object, because the cost of going above the floor will be borne by that state itself. So, what is it that we want the GST Council to really discipline about? Perhaps it is definitions, but it's once again going to be difficult given the GST and backbone to go very far from definitions or rules. So, it's basically rates of tax we want them to be disciplined about, and that I don't think it should be an issue that you need discipline on.
I hope you're right. Vivek, I know before you told me that it's going to be very difficult to list all the sticking points, as it were, but if I were to ask you, that if you look at GST, there are broadly three constituencies as I see it: the tax administration, center and states, then the GST and network, which gives you the infrastructure for it, and businesses. Now, these are the three broad constituencies. If I were to ask you, what do you think are the main sticking points as far as tax administration is concerned? Could you list them?
Oh yeah, absolutely. So I don't think it is at all clear as yet as to what will the central and state administrations do, because the tax is going to be levied on the same transaction. Unlike today, where excise duty is levied on manufacture and VAT on sales and service tax on services, the same transaction will attract both CGST and SGST. So, what will two bodies do? I don't think that's clear at all, and there is no simple answer. So, that's one sticking point. How do we figure out a system where you don't have every business visited by two authorities for the same set of transactions? That's just one simple example. Another example, which I think will be complex in the coming months, is the GST involves that when goods or services move across to the other state, then the supplier in the other states gets credit for the tax revenues collected in the first state, which means that the first state has to hand over those revenues. I think that this is unprecedented in India, and we're going to have to go through a lot of learning pains to get comfortable with this. I think we'll see a lot of issues on this. Here, just a couple of examples.
Okay. Satya, what about businesses? Given that GST will call for much greater documentation than most of our businesses are used to, even under VAT, I think it took them a long time to get used to the documentation. Is business ready to go in for GST?
Business is not ready yet, but they can get ready. All they have to do is to get on with it, and most of the medium and larger sized businesses will welcome any kind of a documentation requirement, provided it does not put extra burden on them in developing new documents. Because if their biggest concern is that whatever reporting requirements are there, if they can comply with them and go to sleep in peace. The last thing
but
they
does
want,
that ever happen with tax?
Yes, it does.
It does.
It
Okay.
does. In most of the advanced VAT jurisdictions, it's really a self-assessment system. Typically, I use the example that in advanced jurisdictions like Japan, Australia, New Zealand, Japan, or even Singapore, it takes no more than 2 to 4 hours per month to comply with the tax laws once they have developed the system.
But in India, every time the government talks of a Saral form, we find it more difficult to fill up, even our own personal taxes.
And even if you fill out the form, that's not the end of the story. You get nightmares. What if I get the call? Absolutely. And it's that part which can be tremendously simplified by having a good system place which is automated, fully based on information control as opposed to physical controls. And this is a mindset that has to change, because our bureaucrats are typically basically living with a pre-independence legacy era.
So you think that businesses are more ready, not so much tax administrations, at least in terms of mindset.
Mindset, yes, absolutely. In fact, they will welcome the changes that are being contemplated.
Okay. Kavita, let me now shift to the GSTN. The GSTN has been set up as an SPV and not as a government department to provide the IT backbone that is essential to the success of GST. But will that alone suffice to ensure that it's nimble enough to deal with all the challenges?
So the GSTN is offering stuff in two models, as they say. There are about 19 states for which GSTN is going to provide the back-end support as well as the front-end to deal with the taxpayer. The major states like Maharashtra and company will be having their own back-end operations. So, to a certain extent, GSTN actually makes it possible for smooth implementation in a large number of countries, provided the GSTN works out fast enough. It also limits what each of these states can do in the short run. So, to that extent, I think I would agree. What I am a little concerned about, apart from the issues raised by Satya and Vivek, are issues where if you read the GST draft law that has been put out in the public domain for discussion, you do find a flavor which suggests that the tax department is looking out for itself a lot. For instance, the tax department, the way the law is structured, they don't propose to depend totally on invoices as a mechanism for understanding or assessing what is the value of a transaction. They have introduced this whole concept of a related party transaction, which earlier used to be an issue that income tax worried about a lot more. And they have introduced the question of how do you value transactions between related parties. Now, given that we are talking about an interstate tax and ITC flowing across state borders, a lot of companies which span more than one state are likely to have transactions between the parent and the subsidiary company, or between branches of the company located in different states. And so, these issues of what exactly is the value of the transaction between related parties can potentially become a very contentious and litigating issue.
Yeah, actually that's true. Almost everything about GST is contentious. But Vivek, can you have different rates of GST across states, or do they necessarily have to agree to one uniform rate? Again, on the issue of exempted items, do you see states agreeing unanimity on that aspect again?
I see that there will be uniformity on rates, exemptions, etc. when we go into GST. After a few years, there will be a disparity in these aspects, but I think that's okay. I think it's normal that some states would, for legitimate reasons, find it advisable to exempt some items. So, but I think that's something that we'll need to worry about after 2-3 years of GST, not on day one.
But to start with, you think there will be unanimity on the exempted items?
There will be uniformity. There may not be unanimity, but they will accept that it will.
Okay. But Satya, another aspect on which there's been lack of agreement so far, at least on this threshold level of 1.5 crores. Now, how significant is it, and how much of a difference does it make?
In my view, it's largely a turf war between the state officials and the central officials, because if they can have an exclusive control on the small dealers, it will guarantee them to have their jobs for the next 10 or 20 years. As far as the dealers are concerned, they don't like neither the central nor the state bureaucrats. All they want is to have a faceless system where they can provide the information to the machines, and everything is done through the machines.
Okay, so that's what they want. They want as little interface with the tax authorities. Understandable, I would say, entirely. But I'm afraid I have to end this discussion here as we're completely out of time. Clearly, as far as the GST is concerned, it is a very complex legislation, and the legislation is only part of it. And there are a whole host of other issues that need to be sorted out. But as long as it's done in the spirit of cooperative rather than competitive federalism, I'm sure the glitches can be ironed out, so hopefully sooner rather than later. Thank you so much, Kavita, as well as Vivek and Satya, for joining me in this discussion. Thank you also for watching, and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.